This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So now let's go back to the gold market. On the gold market we could see the same action, in fact. So market stands at the support, that is the major 618 support of that thrust up, and monthly pivot support 1. And probably we could say that market is really could show the downward continuation, but the reason for our some concern is that market is forming the reversal pattern, that is falling wedge, that is at least theoretically should be the reversal pattern, and market could show the upward breakout of this pattern. Whether it will be some retracement or that will be the reversal to the upside or something. And as we said in our weekly research, our major focus point is how market will exit, how market will resolve the situation with this falling wedge. Because based on the intraday charts, market has the next target around 2040 area. That is, by the way, the 618 extension of that ABCD pattern. Also, market has lower target with this greater ABCD pattern and so on. But the major concern is about just the wedge pattern. Also, as I said in the weekly research, that probably we should not treat this as the head and shoulders pattern, because take a look at the bit greater picture. This head and shoulders has appeared right in the somewhere near the bottom of the after the downward action. That is not the place where head and shoulders pattern should appear. Except the shape, it has no quality of the head and shoulders pattern, because head and shoulders should appear at the top. That is the reversal pattern. But here we see some bounce to the upside and some curious head and shoulders, something in the middle of this bounce. So that is absolutely not common for the appearing of such patterns. Well, in the short-term perspective, guys, I do not see much what could be done on the gold market, because on the 4-hour chart, take a look, market has done well with our setup of the brand body sell. So if you have followed our trading plan and you have tried to enter short in this area that we have discussed, that was nice area to short the market, since we have the nice thrust down, retracement, 1-2 closes above the 3x3 right, reaching of the significant resistance right at the weekly pivot point. That was excellent brand by the sell. So also that was the previous swing low. So this short-term setup has been fulfilled by the market, just excellent. So market now has touched the target of the brand body already. That's 618 support of the whole backward move. So that trade has been done, has finished. Now, if you still have the short position, you hold it. Well, guys, I probably think that it's reasonable to take the half of the profit right now and to tight your stops on the break even for the rest of the position, if you intend to hold the position with the hope that market could show a move to the downside. That's really could happen, I do not know. The question that I would like to discuss on the gold market is almost the same that we have discussed in our today's video dedicated to the euro currency. And I will ask you, what will happen if default will announce with the gold market? And what will happen if Republicans and Democrats will come to the agreement and we will escape the default? Whether gold will rise or whether it will fall? Because that is not a very simple question as it seems in the first glance, because you could think logically, well, if there will be no default, gold should fall because the turmoil and the concern will be relieved. But if the default will happen, gold will probably will rise, because that will be indecision, the uncertainty on the market, as it will be the strategy for the financial markets, and in the times of the uncertainty, gold will rise. Well, I am not sure with these conclusions, because if you'll take a look at the 2008 on the euro currency, you'll see that during the subprime crisis, when it has started in the United States, the dollar has risen significantly. Why? I ask you, why gold has risen? Because during the crisis that has happened in the United States. The answer is simple. That was the liquidity crisis and was the extreme demand for the cash, for the United States dollars. That was the crisis at all. That's why that was the demand for the safe haven assets as the United States treasuries and the United States dollar itself. That's why the United States dollar has risen during the crisis. So what we have the result. If there is the crisis in the United States, the dollar is rising, and if everything is okay in the United States and the economy is growing, the dollar is rising again. So how we could deal with this mess? The answer is simple. If default will happen, I'm not sure that gold will rise significantly, because I'm sure that demand for the gold will increase significantly, but demand for the US dollar also could rise significantly. And since gold is trading to the United States dollar in relation with it, and if the demand for United States dollar will be greater than for the gold, I can't exclude the situation when the gold will stand flat or even will fall a bit, even if default will happen. But you may ask that since that will be the default, then probably that will be the collapse for the United States economy and the collapse for the United States dollar. Not quite, because the first data when some obligations, the bonds, should be pay off is 24th of October. First of all, they will have still the week between the 17th and 24th of October till the first maturity date of the United States treasuries. That's the first moment. Second moment, that will not be the default at all. That will not be the permanent default. That will be probably the temporal default, because this will not mean that will not come at agreement at all. Probably they will come, but a bit later. That will be some delay in the payoff on the bonds. That is just some situation of warnings, but not probably the situation where there will be the collapse for the United States economy. The payoff on the debt probably will be a bit postponed, but not be cancelled. And that will lead us to conclusion that the overall situation could be treated by the investors as just a temporal turmoil. In this situation, you need to protect yourself, and that could trigger the demand for the safe haven assets, and US dollar, as the result of default, could rise again. And I will not be surprised if this will really happen. You could say that this is unlogical, but guys, the market's irrational. They're not illogical. They are driven by the market money flows, and in this case, the money will flow in the most safe haven assets. And since that will be the temporal default, that's probably most investors again will treat the United States dollar still as the safe haven asset. I can't exclude this possibility. So think about it. That is not very simple as it seems at the first glance. That if default will happen, gold will rise. If default will not happen, gold will fall. Not quite so. I think that's not very easy. The same is with the US dollar. But I should calm you a bit, because as I said on today's Euro video as well, today I have seen the article in the Reuters News when some politicians that are close to process of the discussion between the process of the agreement between the Republicans and Democrats stated and give some hints that probably they could come to agreement even today. When they will come to agreement, it's also the question what will happen, whether United States dollar will rise or it will fall. From the one perspective, if they will come in agreement, it will be the great relief, and in this case, United States dollar probably should rise, because everything is good in the economy, and the economy is continued to grow. and so on. That's again, we could invest in the United States assets and so on. But maybe it will fall because the turmoil will be relieved, will be destroyed. So maybe we could exit from the safe haven assets and so on. So as you can see, we have more questions than the answers in this case. And every position have its own logical foundation. So that's, guys, I think that will be a nice topic to discuss on the forum today. Speaking from the technical point of view, currently on the gold market I do not see much to trade because market has accomplished our short-term setup. Brand by the trade has been completed. Maybe as usual on the gold market, since it likes to shows the wash and rinse of the lows, I can't exclude that we could get, for instance, the butterfly buy here. That's very probable. But our major concern here is a major focus is how market will deal with this. But my suspicious, I still can't exclude the possibility that market will still show the move to the downside. I just somehow think that this probably could happen. At least that's just my sense, my thoughts, and I do not call you to take any position because now, in fact, we do not have any foundation for that. We do not have any context. Better is just to wait when the market will resolve the situation with this falling wedge, either to the downside or to the upside. Until that will happen, or until we will not get any other patterns to trade on the intraday charts, I think that's better to be flat on the gold market.